Snipers, you have to see what's happening in the Bitcoin price this Thursday as the Feds announced another 75-point rate increase. And look what happened to the markets. We wiped out over $860 billion today from the US stock market. And Bitcoin also came down to test 20,000 US dollars, but we held above the major support level. Now, it is going to take a couple of days for the markets to really price this in. And the Feds are starting to use language indicating that at some point or another, they're going to ease away from these interest rate increases. And now they're more focused on how long they're going to keep the interest rates the way they are. And that was sort of a positive sign there. And now let's check out what's happening to the charts, because notice how it's been quite difficult for Bitcoin to see any further downside below 20,000 despite the news, despite the stock market wiping out $860 billion. And so in the immediate short term, what you'll notice here is we formed this sort of double top formation so far, and now we are just kind of sliding down, but we have this major support here at 20,000 that Bitcoin has yet to breach below. And that's a very positive sign, because as long as we're having a cup of coffee above this major support, the likelihood that this is not the final destination is extremely high, and that an upside move is probably imminent in the near term for us to come and test this $24,300 level. And why would that be significant? Well, if we were to just go to the next level of resistance, it would put us fully above the 20-week moving average, which you can see Bitcoin is currently facing as we record this video. And it's not just Bitcoin. We know the S&P 500 also facing this 20-week moving average. Talking about the S&P 500, look what happened to the S&P 500. Super interesting price action here. If we were to just go on these smaller time frames, notice how we did see a sell-off, but we're still holding the major support. And so if and only if we break this major support here, the midpoint of this channel and the previous weekly open, not a coincidence, then we could be a little bit more worried. But as long as we're holding this major support level, an upside move could potentially be on the table. Now, let's say we do start to see hourly and 4-hour candles breach below 37.71 for the E-mini futures contract. At that point, we want to monitor the candle symmetry, and that would be the first indication of a potential breakdown. And then we can start talking about potentially new yearly lows. But we can't put that on the table just yet, because the news already came out. The markets are starting to price in the news from the Feds, and we're still holding support. So, in the past where we've faced resistance and we've closed the day facing resistance, we've seen further downside, but this is quite the opposite. We're closing the day facing a major support level, holding the major support level, which means we are currently not breaking down. There isn't anything that we're worried about just yet. The DXY, you can see, is yet to form any new yearly highs. It's actually below major resistance levels. It's actually facing this major resistance right now, the previous weekly open. And so things are still intact after the news. I wouldn't be too surprised to see any further upside into this weekend, as long as we're holding above 20,000 US dollars for Bitcoin. For Ethereum, you can see the range that we're in, 1440 and 1760. We're holding above 1440. That's a positive sign. And the Ethereum to Bitcoin chart doing so well doesn't give off too many bearish vibes, because we're holding 65,000 Satoshis. We have more room to go to the upside. That's looking really good for the Ethereum to Bitcoin chart. So the Feds finally announced the next interest rate increase, 75 points. This was already priced into markets. This is what we were expecting. But now they're saying that their priority isn't to raise interest rates further. Not saying that they won't, but their main priority now is how long are they going to keep interest rates at these levels. Around the 5% level is their target, I guess. So, of course, they want to start to see inflation come down. They want to start to see deflation. And so they're almost saying that we're going to continue to hold the interest rates at these levels, regardless of what happens to the economy. And then we'll bring the economy back by lowering the interest rates later once inflation is solved. And that's one of the goals of the Feds, right? To control inflation and to control price stability. So let's see what happens. They're also focused on controlling employment, right? Those are their two main goals. So if we start to see unemployment increase, that would be a sure sign for them to start pivoting. And so we haven't seen that yet. Do they really have a reason to start lowering interest rates? Probably not. They'll probably keep it at these levels for quite some time until they have a reason to pivot. That's what it seems like. But the markets did react by wiping away $860 billion. I think Apple now is the equivalent of Google, Meta, and Amazon combined in terms of market cap because of how much Amazon lost market cap and Facebook lost market cap last week. Remember when it was down 20%. So we're seeing a lot of shifts occur in the market, but what's very true right now is that Bitcoin is holding above 20,000 US dollars. That's very positive. In the immediate short term, as long as we're above 20,000 US dollars, there are upside targets on the table. At any point, we could be seeing an upside move. And you can see the day traders got quite the ride today with that announcement. You can see this insane candle that peaked above the weekly and monthly open, then it came down below the weekly and monthly open, and now we're kind of back at the same place we were before the Fed's announcement. So, markets are pretty calm. They're pretty stale right now, but it's not a bad sign. As long as we're not seeing a falling knife, as long as we're maintaining major support, as long as we have some sort of bullish structure here to work off of, like this potential double bottom, things are still looking good. And so, Bitcoin just sitting at its 20-week moving average the way it is, why wouldn't the bulls at least get the chance at this point to test prices above that 20-week moving average? It's going to be an interesting close to the week, snipers. I'm going to be honest with you. If we pull up the 6-hour chart, for example, for the SPY, yeah, we had this extremely bearish 6-hour candle, but we're still above support, and that's really what matters, right? It's a support that's holding. Now, that could change if we break that support. So if that happens on Friday, I'll get another emergency video out to you guys like always, but hopefully that doesn't happen. Hopefully this is either the bottom or close to the bottom. Let's see what happens, snipers. I'd love to hear your thoughts in the comments below. Smash the like button for the YouTube algorithm if you support these updates. And until next time, snipers,